Hi everyone! The US stock indices have finally snapped their three-day losing streak. Asian stock markets also went up amid optimism on Wall Street. Investors are now sitting on the sidelines ahead of the Jackson Hole symposium scheduled for Friday. They are likely to adjust their trading strategies after the result of the symposium. Now speculators are ready for the Fed's hawkish rhetoric, completely abandoning hopes for a dovish stance. This is why the market reaction to Jerome Powell's testimony could be more predictable. However, investors may consider his speech less hawkish. It has happened more than once. The US dollar retreated from its 20-year high during the Asian session, allowing its rivals to recover slightly. The economic calendar for the Asian session is completely empty. For this reason, traders are anticipating the US economic reports, which are due in the second half of the day. The US is going to reveal its second quarter GDP and weekly data on initial jobless claims. According to the Fed's projections, the country's long-term economic growth will be 1.8%, adjusted for inflation. Analysts polled by Reuters predicted 1.7% GDP for 2022, with a slowdown to 1% next year and back up to 1.8% in 2024. The outcome impacts incomes, employment, and issues like the relative burden of government debt, which rose markedly during the pandemic. Fed officials as well as policymakers of other central banks will discuss the consequences of the pandemic. They now seem less catastrophic compared to the new challenges. Political and economic issues have pushed prices to a 40-decade high. No one really knows how long it will take to cap galloping inflation. The main instrument now against inflation is monetary policy tightening. This year, the Fed raised its benchmark rate by 2.25 percentage points. However, the regulator did not clarify the pace and the size of further rate increases. Despite the bullish sentiment, market anxiety persists. Investors want to find out during the symposium how aggressively the Fed is going to hike the key rate in the future. Perhaps the Fed will have to deal with more issues given recent downbeat economic reports. The federal funds rate is expected to reach 3.80% in March 2023, up from 3.62% 2 weeks ago. The likelihood of a 75 basis point rate totals 60% according to pricing in interest rate futures. The US dollar index, which measures the strength of the greenback against a basket of 6 main rivals, declined slightly below 108.5 in the Asian trade. It's likely to maintain its bullish bias amid expectations of Jerome Powell's hawkish rhetoric. However, there is a risk that his testimony may be considered less hawkish. If so, the US currency will lose its early gains. It may also incur losses if the Fed chair raises concerns about the consequences of monetary tightening. Now traders expect the greenback to touch a yearly high located above 109. If the bulls manage to push the price above this level, the next target will be the 109.77 level, which is a high of September 2002. After that, it could climb to 110. The majority is still betting on a rally of the US currency. The uptrend should continue until the end of the year, as inflation will soon reach its peak and interest rates will grow to the target range. The US dollar index could perform a downward reversal. The US currency may hit its highest level in the fourth quarter of 2022. After that, a bearish cycle could begin next year, when the economy slides into recession and the Fed stops raising key rates. The yen was able to recover today amid the weakness of the US dollar. The dollar-yen pair dropped below 137. The US currency is still flirting with its yearly high of 139.40, locked in mid-July. Nevertheless, the bullish bias remains strong as traders are looking forward to Powell's speech. According to the St. Louis Fed, inflation expectations in the US have been rising for the sixth day in a row. By the end of the American session on Wednesday, this indicator advanced to 2.62% after reaching the July high on Friday. A jump in inflation expectations may force Jerome Powell to express more hawkish comments, as inflation is far from the Fed's 2% target. The CPI index is about to 8.5% in annual terms. At the same time, the Bank of Japan on Thursday stressed the need to ramp up stimulus to underpin a fragile recovery. Bank of Japan policymakers believe that such risks as new virus outbreaks, supply chain disruptions, and a slowdown in global demand justify an ultra-loose monetary policy. The nearest resistance level for the American dollar-yen pair is located at 137.7 and the support level at 135.8. The Aussie also regained ground following a drop in the greenback. The Australian American dollar pair managed to bounce back to 0.6970. Despite a significant increase, the main outlook remains in force. The pair is expected to consolidate in the range of 0.6850 and 0.7005. The Australian dollar is still in the bear's claws as the greenback is likely to maintain its rally. The longer-term prospects look brighter. The Australian dollar could advance to 0.7100 in the next 3 months. Australia's economic expansion has slowed down as well. However, the RBA projects a 3.25% increase in GDP in 2022, thanks to improved consumption, investment volumes, and export of services. Economic growth is expected to slow down to about 1.75% in 2023 and 2024. Despite a contraction, this outlook looks much more positive than in Europe, the UK and the US, which may face a recession next year. For this reason, a forecast of a rise in the Australian American dollar pair to 0.7100 and above is based on this outlook. However, it's likely to retreat soon below 0.6900 as the US dollar is sure to assert strength. Now investors are looking for clues about whether inflation has peaked. Any signs of it may indicate a more favorable scenario for the US economy and the global one. Judging by the dismal situation in some markets, it is still early to count on a steady recovery. That's all for now. Subscribe to our channel and keep close tabs on market developments. See you.